Dirty dealings, corporate battles, consumer wars. This is Evening 5. Oracle, the world's largest database management company, plans to invest more than $6.5 billion or 27 billion ringgit to set up its first public cloud region in Malaysia, a move that will help boost the country's digital economy and drive artificial intelligence-fueled innovation. The company said in a statement this morning that this planned public cloud region will help organizations in Malaysia modernize their applications, migrate their workload to the cloud, and innovate with data analytics and AI. It added that customers and partners will be able to gain low-latency access to cloud services based in Malaysia. MITI Minister Tengku Datuk Sri Zafrul Abdul Aziz welcomed the investment and said Oracle's decision underscores Malaysia's infrastructure readiness and its growing position as a premier Southeast Asian destination for digital investments. Garrett Ilg, Oracle's Executive Vice President and General Manager for Japan and Asia Pacific, meanwhile, noted the investment affirms its commitment to the country as a regional gateway for cloud infrastructure, as well as a comprehensive suite of SaaS applications deployed here. Escalating tensions in the Middle East triggered a broad sell-off in the Malaysian stock market, with the benchmark index falling to a 3-week low. Fund managers whom The Edge spoke to said market sentiment may turn cautious in the near term, though the selling pressure could just be a knee-jerk reaction to the latest developments in the Middle East. TradeView Capital Chief Executive Officer Ng Chu Han suggested investors increase their cash holdings to manage market volatility, given the geopolitical risks in the Middle East, as well as the upcoming US presidential election, which is considered the biggest risk factor in the last quarter of the year. He said being highly invested ahead of major market events is not prudent, and that increasing cash allows for strategic buying if the market corrects significantly. Fortress Capital founder and CEO Datuk Thomas Yong said investors with a shorter-term trading strategy might want to be cautious in the near term. For longer-term investments, he said, investors will likely stay invested in the market. Meanwhile, Arica Capital CEO Danny Wong sees the sell-off providing a good opportunity for bargain hunters, following the benchmark index's strong performance so far this year. Reiterating that market fundamentals remain intact, he said investors should continue to stay invested. At the close, the FBM KLCI tumbled 1% to 1,639.31 points, the lowest since reaching 1,638.31 points on September 12. The US Commerce Department set preliminary duties on solar imports from Southeast Asia after an initial finding the equipment is benefiting from illegal government aid. According to a Bloomberg report, the determination marks an early victory for domestic panel makers who say cheap imports are harming their operations and threatening investments meant to cultivate the US solar supply chain. The report noted that renewable developers will face higher prices for their equipment right away. For many imports from Thailand and Vietnam, rates will apply retroactively going back 90 days to early July. It said preliminary general rates for companies not specified by the Commerce Department are 8.25% for Cambodia, 9.13% for Malaysia, 23.06% for Thailand, and 2.85% for Vietnam. Company-specific rates include 14.72% for imports from Hanwha Qcells Malaysia, 3.47% for imports from certain Jinko Solar Holding Co. entities in Malaysia, 0.14% for Trina Solar Science and Technology Thailand, and 2.85% for certain JA Solar Technology Co. entities in Vietnam. The investigation is set to reach into next spring, the report said, and final rates could be raised, lowered or jettisoned altogether based on the results of the probe. Sunway plans to buy a 7.11 hectare plot of prime land in Taman Tenten, Kuala Lumpur for 320 million ringgit, earmarking it for mixed-use development. The land has an estimated gross development value of 3.2 billion ringgit and is situated adjacent to Sunway Alishan, a residential development by the group. In a statement, it said the proposed development will integrate opulent service apartments with a wellness-focused retail podium featuring health and wellness clinics. The land is being acquired by the group's subsidiary Sunway Melawati from Viva MPN. Sarina Chia, the managing director of Sunway Properties, said the acquisition presents an exciting opportunity to address the increasing demand for high-quality, integrated developments in Kuala Lumpur. The developer aims to create a holistic community space centered on wellness and is confident that this development will catalyze and elevate the growth in the surrounding area. Shares of Sunway closed 2.8% lower at 4.13 ringgit, giving the group a market capitalization of 23.63 billion ringgit. Year to date, the counter has appreciated by over 92%. Sunzen Biotech said it has identified another potential target for acquisition that could help accelerate growth of the company, which mainly makes supplements. According to Sunzen Executive Chairman Ching Chi Pun, a potential target is a local company in the finance industry. He said a deal could be reached by next year, which could complement its businesses that also include providing loans to small and medium enterprises. Ching explained that acquisitions would offer a faster growth path compared to organic growth. So once a suitable target is identified, Sunzen would be prepared to move forward with a deal. Ching was speaking at a press conference on the acquisition of a 70% stake in iNation Medical that sells ophthalmic products. At today's close, shares of Sunzen were unchanged at 34.5 cents, giving the company a market capitalization of 253 million ringgit. Over the past 1 year, the stock has gained 68%.